Hey traders, and welcome back to another Market Insights episode with yours truly, Richard, serving traders responsibly with Orbex. Now, today is the 12th of February 2019. It is 10:34 a.m. Eastern European Standard Time. And in this episode, the main asset in focus would be the pound sterling, because there is significant news coming up for the British pound, which is basically Governor Carney's speech for the Bank of England. And right after that, we will have, let's say, the next market mover would be the Federal Reserve Chair Jerome Powell speech, and some hints in regards to the next, let's say, for instance, monetary policy and direction of the Feds, right? But not only that, we do have the Kiwis, the NZD, the New Zealand US dollar, let's say the RBNZ interest rate decision. So we have a full plate when it comes to volatility for the Forex pairs. However, I decided just to keep it simple and focus on the pound. I have, let's say, picked some pairs, which will be the pound US dollar, pound yen, pound Swiss, and euro pound, because they could be looking like they could synchronize for a correlation, for something to actually possibly start. So let's just jump on the pound US dollar on the daily time frame. And if you followed me previously on the previous released episodes, then you know that I was actually labeling this as, I was looking at the structure as either a running or expanding flat in a more of a complex corrective cycle. So what I'm saying is that there's still a possibility, and this is a decisive moment, so there's still a possibility for the pound to surprise on the upside, depending, of course, on the fundamentals and some trigger that could result towards this possibility for the British pound. And the pound dollar could actually stop, or let's say, for instance, right here. So in a pessimistic scenario, as you guys can see, this is the moment of truth, and the 50% Fibonacci retracement from this entire rise is important. 50%, 61.8, as it is basically a point of interest right here, and a decision has to be made. So this zone right here would actually tell if this was indeed a running flat and the pound is actually destined to move lower in a rampage, and let's say, for instance, in a sell-off, right? Or this could be an expanding flat, and if it is an expanding flat, then this C wave could actually develop as an ending diagonal in this type of structure, right? Like this. So in a sense that the third wave could actually occur and another bullish outcome could result. So let's say, for instance, possible Fibonacci projections with the Fibonacci extensions from A to B right here, intermediate degrees green, could result towards 161.8, which are kind of lining up with the 50% right there, but also 200%, which is lining up with the 61.8, which is the golden ratio from that entire fall. So yeah, now what I'm saying is that the pound could surprise for the upside, right? Now, for that, we're just going to zoom in to the 2-hour time frame, because the way it's sliding on the downside looks corrective, in a sense that this could be a double or a triple free. As you guys can actually see, I am labeling this structure as a triple free. So we have basically a complete structure right here, then the bridge, the X wave, right? And then another structure right there on the downside, another interruption, and possibly the last piece, so the piece dollar resistance here, which could deliver a bullish divergence on the 2-hour time frame once this could actually hit the 50%, 61.8 right here for that vibration zone, where it previously, let's say, reacted right there on the upside with that running flat in this minute B blue. So the the running flat right here. So A, B, and then the C wave, right? So you guys can actually see that the C wave reacted right there violently on the upside. So what am I saying is the fact that this could be a bull flag, and the support can be granted right here, somewhere around the 50%, 61.8, and the levels are 1.2820 and 1.2750. All right, so enough for the pound dollar. You guys know my views. The bullish divergence could actually take effect quite soon. Let's just jump on the pound yen, because similar to that, okay, similar to the pound dollar, the pound yen is looking corrective with this piece as well. I'm not saying that it cannot, cannot like move one more, but I'm saying that this could this could actually take effect about 50%, 61 points. So same kind of like same setup. I would actually incline for just one more and then a bounce, let's say, for instance. So pound yen is quite, let's say, it's not, wouldn't be the best option in my personal opinion, because I'm seeing some significant strength possibly coming for the yen itself. So better we just move on to the pound Swiss, because if you remember what I previously mentioned for the pound Swiss, it is sliding on the downside, and this is the way I'm labeling this corrective piece is in a double free structure, so WX and then Y right here, okay, and another bullish divergence could actually occur. So you see the same possible scenarios kind of line up for the pound itself, and the Fibonacci retracements, 38.2 default measurements for this wave 4 minute green, could result towards a bullish run for this piece, and the 161.8, 150% would be basically the Fibonacci extensions of that move on the upside, this correction, and then the C leg of this 1, 2, 3, 4, 5, okay, in an expanding flat for a larger degree pattern. Now, the last one, but not the least, is the euro pound, and previously I've been mentioning the possibility for this to actually start dropping, and it did. Now, the way I'm labeling this this move on the downside, this swing, this bearish swing, is in an impulse, a 1, 2, 3, 4, 5. So 5-wave sequence in an impulse, 1, 2, then the extension, 3, then the 4th wave right here, lining up with the 38.2 and gaining resistance right there, bumped its head a little bit, right? So 38.2 right there for the default measurement of this wave 4. Now, notice that right after that, we do have a possible breach, which I've been mentioning in the previous videos. So it did, let's say, for instance, show a bearish outcome, and the way it's the way it's rising, crawling on the upside is basically in potential corrective structure, which could pave the way for more downsides. So correlations kind of work right here in favor for the British pound. Hope you guys digested this important market insight. Thank you very much for watching. If you did like this video, please remember to support me with a thumbs up. Well, thank you very much. And as always, until next time, stay in the green and many pips ahead.